Hello guys, and glad to have you on board again today. Real quick update on our global scenarios. Still trying to figure the fuck out of these markets that have gone pretty nuts post COVID vaccine news. And until then, all we've managed is basically retrace down to supportive areas, trying to hold them. Of course, we do as we speak, so there is no big warning sign of getting bearish and sell the fucking crap out of here. It's really not really about that. It's more about how much are we going to be handling out there. How are we going to get mature ranges, and out of these mature ranges, what the fuck are we going to be doing? Are we going to extend to larger time frame ranges? Are we going to reactivate trends? Are we going to reverse the market and stuff like that, and eventually reintegrate the previous range? Lots of underlying question. Let me be honest, it's all about sentiment right now. Just like the latest news has been a positive sentiment to manage to get us up to historical highs, at least for a few hours. It still means that we don't know where the fuck we're going at the moment. Lots of uncertainty, and even if we flushed some of our fears, mostly those regarding the health situation, we'll still have a lot of uncertainty regarding the next stimulus package. What is it going to be about and stuff like that? But these things could be positively biased, but in the same time we do have the usual Trump bullshit, who doesn't want to let go, still isn't assessing the president-elect that being so. It's still resisting. A lot of people believing that there is a massive, enormous news coming down the road and stuff like that, all of those QAnon bullshit. So we'll see all about it within the next few days and weeks. Maybe this is true, and maybe I'm the dumb in here, but I sincerely doubt it. But anyway, we'll see all about it. So I expect a lot of jitter down the road, specifically president-driven, at least current president-driven, and we'll see all about it. But I suspect these 2 months transition is certainly not going to be a peaceful transition. So this is probably where volatility could show up, but until further notice, we're just going to wait for these ranges to mature, and we're probably going to get to a mature 15-minute range sooner rather than later as we come on. Okay, we're getting to there, which really looked like a first to second range boundary. We could have had a third range boundary. Pay attention to this. This is happening between 38 to 50%, so this could be accumulation trade if we retrace down to the support context. So far, I would say the positive moving average and stuff like that really leads me to believe that, well, we're very likely just going to stay there, and I think some kind of a triangle or whatever, though I don't think 15-minute is the appropriate time frame in this range, okay? So still being patient as we're maturing, as we're possibly maturing the 15-minute range. I think we're likely going to extend to higher time frames. At least that is my current bias. Unless we get fucked up by external factors implying volatility, I'm going to state that the 15-minute mature range is probably going to lead us to some larger time frames ranging down the corner. So that's my assessment. Until then, people are playing with arbitrages, and this is what I think is the most traded arbitrage right now, the Dow Jones to Nasdaq ratio spread chart, which has been significantly deteriorating the Nasdaq previously, but yesterday, huge rebounds, or good day on the Nasdaq yesterday. Still not breaking any resistance on the major, on the big guys, okay? So still nothing fancy, okay? But the tech stocks have been performing yesterday, where the Dow Jones has been the lagger. So it's really playing all about this thing, double topping structure. Is it going to be the end of this 10-year thing going on, or just a sideways activity before going on tech overperformance again? Still a big question mark. I don't have the answer. I have my personal bias in there. Mine is going to the downside, which means I'm not going to trade against my personal beliefs, but that doesn't mean I'm going to trade them blindly. I'm definitely not selling supports until they're broken. The trend line remains positive. The moving average remains positive. So in here, so far so good. The support is holding on, and I'm waiting for a potential accumulation before actually breaking down. Okay, so now it's all about timing. I'm not being aggressive immediately and stuff like that. Most specifically because yesterday I signaled into the Discord for experienced traders only that there could be a red flag area for the Nasdaq out there. Just give it a second to plot, because we had negative moving average, negative context, and same tradable area, 38 to 50%, which is very dangerous and could be acting as an accumulation trade. Of course, normally we're supposed to have 2 consecutive negative tops before an accumulation, but we also can have accumulation after excessive markets. So I think that we've had an excessive market behavior, specifically with the COVID stuff. So right now is all about, we could have had accumulation, but I was sincerely requiring hell of a negative signal, and we never had such a thing. The only thing we've had yesterday inside the context and close to the moving average is a squeezing pattern. So it's definitely not enough for me to consider a short selling activity. So like I said, we had potential red flags yesterday, really needed a clean signal to try getting in. We definitely had nothing like that. So it's really not an appropriate timing to go bear on the Nasdaq. So I think same thing goes in here. 15-minute is probably not the appropriate ranging time frame, which leads me to believe that we're going to extend at least 1 hour charts and eventually even 4 hours. So don't be on a hurry trading these markets right now. It's all about balancing and therefore ranging. So I think right now having a partially covered portfolio, still having a positive bias, but not too much of it, is definitely the way to go. Okay. So that's for stocks. Okay, then volatility driven, I think volatility could emerge because out of these areas, just last time we've broken that resistance but failed right after the next one. Okay, so we made a major high point in between the latest resistance and the previous one, and basically that's the same thing we're doing here. We broke the support, but I think we're not going to break this one. So we might be building a bottom on volatility. I don't know, like I said, president eventually could be, I hate just calling this guy president, but anyway, Trump. All right, so maybe Trump bullshit down the corner, we'll see. I don't know, but anyway, in this area I'm not really willing to sell volatility. So like I said, if I have decent signals, I'll be willing to trade volatility, and therefore trying to take some intraday bearish trades on the stocks, on the stock indices. But as for now, I'm not having enough of a technical clue to go down this road. So really thinking about it, because some signals lead me to deal with these things, specifically the volatility, but it's not enough of it to consider it a trading scenario. More importantly, next week, next Wednesday, we're going to get the expiration of the contract, so maybe we'll stay there till next Wednesday and only after eventually get to reactivate. So yeah, it's really all about volatility right now, therefore sentiment and external factor driven type of market behaviors, which I don't like. So really don't get too much on trading the stock indices right now, and if you do, lower the leverage, because things could rapidly roll out of control, as so many unpredictable external factors could lead market movements. What matters right now is the 10-year yields. Okay, it's really the center of the maze, because we're dealing with a preceding resistance, okay, which is the massive and very psychological, impactful 1% yield over 10 years, okay? Yesterday, we've been testing this level, and actually, yields have stopped quoting. Definitely, the Fed doesn't want this level to break, and it's totally understandable, okay? So right now, we're oscillating with 0.5 and 1% area, which means if we break this one to the upside, which could happen, okay, but not necessarily is going to happen, we will rapidly shift toward probably an area between 1% and 1.5%. Okay, it's really all about it. So the market is looking at it very actively. Is it going to happen? I goddamn don't know. Are we going to get one more swing in between the 0.5 1%? I doubt we'll ever get back to 0.5, let me be honest. So maybe eventually retracing down to halfway through it and then break this area. I don't know. All I'm saying is that as long as we remain below 1%, there's no red flag. Okay, if we break it, that will send a mid-term to long-term signals to investor, because if you zoom the fuck out of here, you'll understand what the hell I'm talking about. We're talking about something that has gone on for 40 fucking years. Okay, so it's 40 years of credit bubble building because of yields going down. Okay, so it's really all about yields going down, but pretty much rationally. Okay, 4 to 5%. Is definitely the normal way to go. This is where the credit bubble built itself, post 2008 crisis. Okay, We had a credit problem, and what we've decided to do is to create an even bigger problem for the future. But of course, God knows only God knows what the future is made of. So eventually we'll stay there for another decade. So don't take it for granted. But I definitely think that this area is the end of this pattern. I don't think we're ever going to go negative rates in the US, at least not anytime soon. So there is a huge possibility that if we shift on top of 1% to go 1.5%, okay, this area could send a very much of a long-term signal that yields have made a major bottom, and that we're going to have to deal with this credit problem within the next decade. Okay, I've always been clear with that. There is going to be a massive debt crisis around the world because too much debt has been created and growth so far isn't supporting it, and we're going to have a huge problem. So either we find a magical solution out of there, which I doubt is ever going to happen, or we're going to face a problem within the next decade. The question is, how fast does it take place? Okay, so of course, as long as we stay there, there's absolutely no signs of risk. But I think that what we've experienced with the COVID is temporary, and I think we're very likely going to sit higher than 1% yield, but it is a matter of time. Is it going to happen right now? All I could say is that the cycles are supporting this. The cycles are supporting yields to rise instead of keep on falling, and this could be terminating a 40-year structure. But just to give you a glimpse of how important that is, how can you deal with a 40 fucking years long thing in just a few days? So you really need to be patient, okay? The 10-year yields might be crossing the 1%. I think it's definitely going to happen, but the question is it going to happen tomorrow? Is it going to happen 2 months from now? What is a 2-month schedule into a monthly chart? It's definitely nothing. So don't think it's going to happen right now, today. It's going to happen fairly, probably, yes, but not immediately necessarily, okay? So don't call for bearishness. Immediate actions and stuff like that could really be shifted along later on, okay? Problems dealt with later, just push it till tomorrow. Tomorrow's another day, and we'll have to deal with it sooner or later, but it is a decade-long story, okay? Considering cryptocurrencies, most of the targets have been reached out to, so it isn't about time to be crazy bullish, but maybe some intraday follow-through could be dealt with. That's no more than that. On forex, I'm having a look still at the USD/JPY still, because very interesting. At the moment, I'm still trying to figure out what the hell we're going to be doing with this previous trend line. I suspect some breakouts could be possible. Eventually trying to reach out to the moving average could be one of the possibilities. I actually don't know. All I know is, yeah, so far I've reduced my leverage on USD/JPY because I lack of visibility, but I am still bearish out there. So I'm waiting for an appropriate timing to restore my current exposition to higher levels, but until further notice, yes, patience. So if you get it right, okay, my current market portfolio exposition is mixed. I'm still slightly bullish on stocks because I'm just half covered on the portfolio. 50% of my upside potential is covered by downside trades. So I don't know, but I keep a neutral positive bias as long as we remain on top of the 3,500 on a daily and weekly close basis, okay? But until then, I'm not necessarily all in either, because it really feels too dangerous to be just bullish in the current context in which volatility is out of supportive areas and could reactivate out of any external factors we know about, we don't know yet about, okay? So right now, neutral positive bias, but nothing more than that. It would be too dangerous to be excessively bullish out there. Going from forex, team actively looking at the yen, but still have absolutely no clues at the moment. AUDNZD is also triggering some very interesting area. We're in an area in which I'm looking for support prices. I bought this low point, but actually the market looks like it's going to the downside. So I'm really looking all about it, okay? We definitely are in an area in which cycles are still favorable, but could have some breakdowns. So if we break it down, my question is, are we just going to make a fake breakout, just go to the 50% fib and buying the dip out of this other footprint footprint that we haven't bought yet. Okay, so there is another footprint out there. I could be placing it more precisely, but are we just going to go for this footprint and reactivate, in which I'm fine, and I'm probably going to take a little reinforcement out of, or are we going to reach to the context and be patient enough to wait for 61% or some other stuff? Okay, so previously traded supports could be reached out to. I don't know at the moment, but I'm questioning and definitely actively looking at AUDNZD right now. That being said, I'm probably going to record the trend. Sorry, I still have a runny nose, but I'm still going to expect recording a trading lesson later today, probably this afternoon for me. So this is going to be about pullback, but normally without 100% guaranteed stuff, I should be recording this one today. So expect another release of video in the channel today. Bye guys.